Securities offered through Kestra Investment Services, LLC. Kestra IS, member FINRA SIPC. Investment advisory services offered through Kestra Advisory Services, LLC. Kestra AS, an affiliate of Kestra IS. Capital Advisory Group, Inc. is not affiliated with Kestra IS or Kestra AS. Neither Kestra IS nor Kestra AS provide legal or tax advice and are not certified public accounting firms.
You work hard for your money. For the next hour, you're going to learn how to keep what's yours. Capital Advisory Group presents Keep What's Yours. Here are Josh Gilbert and Jeff Zufall.
Hello and welcome to Keep What's Yours with Jeff Zufall. I'm Josh Gilbert, sitting here with Jeff Zufall, author of the book Keep What's Yours, host of the show Keep What's Yours. Jeff, good afternoon.
Happy Saturday.
And it is a happy Saturday because it is a holiday weekend.
That's right.
And what are we going to do? We're going to talk about other countries.
That's right.
This holiday weekend. But before we get into that, the EU, big news out of the EU, they want everyone to have a digital ID.
Yes.
And they want everyone to have a digital wallet. And inside that digital wallet, you can store your digital currency. So what is the landscape like in the United States from a tax standpoint? You know, when you're doing people's taxes, is it easy? Does the IRS have a handle on how Bitcoin and cryptocurrency works?
They do. And what's taken place over the last, I'll say, 3 years is there's a one-liner that says, do you participate? And they've changed this up each year. But it says, do you participate in digital currency? Did you I think 2021 was, did you buy, sell, barter, exchange, any digital currency? And it's a yes or no box. So what they're trying to do is catch people that have it and go, hey, don't report it because I didn't get a 1099, blah, blah, blah. And then they say, hey, I don't have it, but yet they really have it. That's an issue.
And this goes back, and this boggles my mind that we still do it this way. The IRS is working off of an honor system.
Mm-hmm.
We know how much you owe us, but why don't you tell me?
Tell us the right number. Yes.
Why don't you tell me how much you think you owe us? And it lends itself to wanting to, well, I don't know. I don't think I owe you that much.
Exactly, not that much, but
and if I don't put the right numbers down, boom, they're knocking on my door.
Yeah.
So
they kind of know, and I think through some of these court cases where some of these digital currencies have gone down, originally they said that the defendants of some of these cases were going to be I'll call them shareholders, the digital currency holders, and that their names were going to be exposed through the lawsuits and the court proceedings. Now some judge has said, oh, no, it's just they're all, John Doe. They're hidden. Their names aren't released. So I think that's what the IRS was really wanting to get access to is some of these client lists. But what we see is people show up and they go, oh, hey, I did do digital currency and I only had $300. We see a lot of, I'll say, 45 to 30-year-olds that dabbled in it a little bit, a couple $100 in losses, and they're like, no, I'm done. I'm never going there again. But we see other people who are very heavy in it. So they go and purchase a couple different apps, and we'll kind of advise them to go do that. The apps will actually track purchases, sells, buys, exchanges. Some exchanges are taxable, some are not. And at the end of the year, it gives us that summary. So I'll say unless you're dealing with like TD Ameritrade or a couple of these other, I'll say, online brokerage, they will actually kick off a 1099 for you. So you don't have to worry about it unless you transferred your shares or your currency over there, and then we got to find a basis. But they'll give us a 1099. That's short, sweet, and simple. But
just like, Ameritrade or E-Trade or, the big houses.
Yeah. But it's kind of scary on what's taking place in the EU, where this is going to be your vaccine card. It's going to be your driver's license. A digital currency gets held there, and it's literally a digital wallet. And it's a mandate that went into effect, I think it was sometime last week, by the EU. So everybody in the European Union is going to have this little thing that they kind of carry around with them. In the States, you either use a third party to hold your Bitcoin for you, or there is a new thing we've seen where people can like roll it out, put it on a terabyte drive in a sense. It's still your digital currency, but you own it. And then When you want to plug it back in a sense, you push it back over to do your exchange. So it's kind of weird.
Obviously, if I have a real wallet filled with actual cash and I lose it, it's
done.
It's gone. And it kind of seems like that with cryptocurrency as well. But with the modern age being what it is, I do online banking. I pay for stuff on my phone.
Yes.
I didn't even bring my wallet the other day, and I was still able to go to Walgreens, go get lunch.
Exactly.
We had a handyman do some stuff. He sent me an invoice. I just hit Apple Pay. It read my face, and it's like, boom.
You're good.
You're
just
good
did
to
that
go.
for somebody did work for us, too.
So it seems like cryptocurrency is the Wild West, but it really kind of seems like whatever I'm doing online banking is digital currency.
It is, but the difference is this, is your bank that you're dealing with is regulated by the federal government. So there's FDIC insurance backing you up to $250 an account. The banks have a certain, I'll say, requirement for reserves. There's ways that they're forced to, invest excess capital. The same goes for credit unions. They're under another, it's not FDIC, but it's FDIC for credit unions.
There's laws, there's rules.
And there's rules they have to follow. So what we saw was the Sam Brinkmans of the world, where they knew that they were using other people's digital currency to move forward.
And what was that called again? Tom Brady got caught up in it.
Yeah, that was, it's terrible. I can't remember.
Yeah, doesn't matter. It's gone now.
Doesn't matter. It's gone.
Yeah,
but
did you have some? Well, you don't anymore.
Exactly. So the court proceedings are taking place. And the funny part is on Brady and who else? Giselle. There's a couple other people in there, too. The Kardashians. They're clawing back the payments that were made to them for their sponsorship, if you want to call it, FTX. And if you remember, FTX was everywhere. You went to
Super Bowl commercials.
Super Bowl. You went to a hockey game. You went to a soccer game, baseball game. FTX. I think the umpires for the National League actually had FTX on their jerseys.
I was. They had the jersey sponsors before the players had jersey sponsors.
Exactly. So he was very good at his marketing. But at the end of the day, he was using other people's money. It was a Ponzi scheme.
It was a classic. Who is that guy that died in Bernie Madoff?
Madoff,
a classic Bernie Madoff Ponzi scheme.
Exactly.
I'll take your money and I'll use it to pay someone else.
Yep.
You come to get your money. Well, it's gone. I already paid somebody else off, but maybe we'll get some more people.
As long as the money was coming in the door, he was totally content, and he could kind of do what he also did. But also, Madoff was kind of weird because if you really look at his positioning, he was respected by Wall Street. He ran NASDAQ for years. So he was the man to go to.
That's wild.
So that's how he got away. Well, and also they think that he paid some people off that were like the regulators who looked the other way and never really finished their investigation, said, oh, he's good. It's
He
Bernie,
had a building with like 6 floors of legit whatever, and then he had a 7th floor. That was the criminal operation. Yeah.
So, again, he got caught. It was a matter of time. But he did run that, I'll say, in a smaller format in the early years. It got really big in the later years, but the 2008 market decline caught him.
Yeah.
Redemptions, people wanted their money back, and he couldn't flip the bill.
So. I can't imagine, people are lining up to give the Wizard of Wall Street, or whatever nickname he had developed over time, very well respected. Why can't you run a legitimate operation?
He never made a trade.
Never
made a trade. So when people, the other hedge funds got mad because they're like, man, we can't compete with this guy. And then when they actually did the calculations, they said there's not enough options contracts in the world to do what he's doing. And there was I don't know what he's like a analyst who actually wrote a letter, detailed out 6 or 7 bullet points on what he was exactly doing wrong, and sent it to the I guess it was like the SEC or somebody.
Is that how he got caught?
And they blew it off. They ignored his letter 2 separate times.
Wow.
Where he thought he had him nailed to the floor, and literally they took the letter and chucked it aside. And then somebody came out and they investigated him, and they were there a day and they left.
So he never invested any of the money?
Never.
They gave it to him. He used some to buy his own boat.
Yeah.
And then he used some to pay off another investor who asked for some of their money back.
Oh, there was always somebody coming saying, hey, and then the I say the concept on how he kept that was like, oh, if somebody ever came and questioned his numbers, he would be like, oh, maybe you're not the person to invest with us or something like that. And he would kind of like put that guilt trip on them, and they're like, oh, no, sorry.
Yeah, he'd take my money.
Yeah, take more money,
But there's so many hedge funds out there, and what was it, BlackRock and all these other ones that we hear of. So many hedge funds that are actually doing legitimate hedge fund stuff, and they're making billions of dollars.
Yes.
So it's like I just never understood why.
And he was running down that path. And that's where these analysts came back in and said there's no way he could do his numbers. And they just, I guess, arbitrarily made up any number that they wanted.
You would think that after a while, he would say, actually, I'm doing pretty well. I could actually start to flip this into, like, what was it, Michael Corleone in Godfather 3? He's like, I'm going to try to become legitimate now.
Yeah.
Yeah. But
I think that, and if you watch the movie on that, it shows where, he thought about it. But who knows what he was really thinking at the end of the day.
So wild west of cryptocurrency over in the East, as in Europe, which is east of us, they are kind of making this, not necessarily you have to buy crypto, but they're kind of, it sounds like they're
lean in that direction quickly.
They're saying you have to get the infrastructure maybe to house it.
And again, that goes down that path of, the vaccine cards. I mean, I stumbled across my vaccine cards the other day when I opened a drawer. I was like, oh, that's where they are.
Yeah, I think my wife's got them. In her purse.
She made a copy and put it in her purse. I'm like, I'm not carrying that,
But if Europe makes you get a wallet, and makes you put your digital currency in that wallet, and hopefully it's all protected, and all that stuff. But if they make you do that, then they can see how much money you have.
How much money you have.
Can the feds in this country? Can the feds go to Bank of America or Chase or wherever I have my money, my credit union? Can they say, can we see how much is in Josh Gilbert's account?
Yes. If they need to for whatever reason, the back end of something, they go look at it.
So it sounds kind of like Big Brother's watching, but
they're already watching.
They're already doing
that.
But
that's where the cashless society comes into play. Again,
the feds can't come to my house and say, Josh, how much money is under your mattress?
Exactly. Now, again, there's people that still deal in cash, all cash. They use what's called the old envelope theory. They get their paycheck, they cash it.
They can say, let's see your pay stubs, but they can't come and see, well, what have you been doing with it since you cashed that check?
But maybe over the next 15 years, 20 years, we kind of head down that path where you don't need cash. You carry this little wallet with you, which has got all of your identification. It's your credit card, it's your digital currency, the whole shoot match, and you just, like we do now with Apple Pay, or even your credit card, just wave your credit card right over the machine, boom, picks it up.
Do you remember back in the day certain bars that you would go to and there was a big sign that said cash only?
Yes.
Or you have a
dry cleaners.
Or you have a $10 minimum for credit card charges.
Yeah.
And I'm guessing that stemmed from the fact that they didn't want to pay credit card fees for, a $2 beer. Oh, by the way, $2 beer, good luck getting one of those.
And they charge you, that doesn't exist.
Yeah.
But I think it's $2.75 transaction costs, which most are buried within your actual cost of doing business, because that's what the credit card companies get.
I just got had somebody work on our golf cart, and we got the receipt back, and it said credit card transaction fee.
Yeah,
and he charged it to me.
Yeah,
like I had to pay my own credit card transaction fee, and I've noticed, especially during the pandemic and during inflation, that companies are putting that back on the consumer.
In the past, they were eating it, but I think Square gets, or whatever they are now, Block gets as high as 3.25, 3.5 for a transaction.
Do they pay Visa and MasterCard?
Apparently, they sit on some of it, and then they pass along some of it to Visa and MasterCard for using the network, basically.
So does Square charge money on top of what the credit card companies charge us?
Yes.
Okay.
Yeah, because Square or even Intuit, I think they charge $3.75, but this goes to the business owners. It's a brainless transaction because when the card is swiped, the payment hits your bank the next day. And also in QuickBooks, it actually drops the client in there. It does the correlation. and reconciles it all at the same time. You don't have to touch it. So you go, okay, is it worth paying $375 for that transaction to fly right through? If it's, I say a decent amount, probably. If it's a $2 beer, no.
Yeah. So going cashless, I mean, the infrastructure is there. You are looking at people's taxes every year. You're looking at businesses' finances. You specialize in small business. You're not just doing people's taxes, but you're doing audits and making sure that when they're in the black, we can figure it out. They're good, and when they're in the red,
guidance as to what the next step should be.
You can say you need to cut corners here and there. So you see this on a daily basis. Is the infrastructure out there? Is a cashless society? Is it running smoothly? Do we have the setup? Is it better this way?
I'd say maybe.
At the end of the year, are you just getting 1099s?
Yeah.
And just marking numbers and sending it off?
I still, from a tax angle, I think that it's still that 1099 shows up. Those tax documents show up, and that's kind of what everybody's looking for. Again, would it work efficiently? I'm not sure about that.
Yeah.
I mean, look at what's transpired in Bitcoin. I say Bitcoin, digital currency, over the last 2.5 years. It's gone from it was on fire, it was the greatest thing ever, to literally it imploded. And you kind of get some negative PR for it too. But there are some still, we've still got clients that are, rah, it's going to do what it needs to do. And it might. I mean, that's the unknown as we go forward.
So from my understanding, at least in the early days of Bitcoin, I don't know why it was started, but I know people used to buy it so that they could use it to buy weird things on the internet.
It was from
buy drugs.
Well, it was from originally designed.
Cannot be traced.
IT guys could trade back and forth, and it never was traceable. It was their kind of secret little way to buy and sell stuff. Not that it was for bad or good, but just wasn't mainstream. And then it's kind of exploded from there.
And like the word I feel like we're getting now is that it would just be a digital currency that would run side by side.
Exactly.
With regular fiat currencies.
Yeah, because again, as we sit today, there's very few regulations on digital currency, other than they're forcing some of these mainstream brokerage houses to kick off 1099s for gain loss purposes. But again, how accurate those are, that's a whole other question.
It can never get to that point, and this is the question I'm going to ask you as far as an investment vehicle, getting into cryptocurrencies, trading it like a commodity. It can never really get to the point of being used as currency if it's going up and down, crazy, random. The dollar doesn't fluctuate like that.
That much. It does a little bit, but... So there was a report, Wall Street Journal.
It doesn't go from 20,000 to 6,000.
Well, the joke was years ago, maybe 12, 15 years ago, there was a report in Wall Street Journal, a guy who worked on Wall Street, and from his office building to get home, he walked down the street.
Lost $1 billion.
And he was gonna pay for everything with Bitcoin as he went. And I think he said his pizza, he stopped at a pizza place to get a pizza for take home. It was like $20,000 is what it turned out to cost him.
Wow.
Because nobody knew what the exchange rates were, or they had a different version of their exchange rates. And he said at the end of the day, it was kind of a joke, but that was at the height of Bitcoin when it was, stupid numbers.
Wild swings.
Yeah. And he said, his walk home to get his normal stuff was like $50,000.
I think I was messing around with one. This is years ago. I went to an El Monstero concert at the pageant.
Yeah.
It was right around Christmas time. I was looking at it. I think it was Ripple or whatever.
Yeah.
And I was like, whoa, it just jumped up to $3.50. When I wake up, I'm going to sell it.
Yep.
And by the time I woke up, it was like $1.50.
Yeah. Yeah.
And it's like, I shouldn't have gone to bed,
Well, look at Musk. He created, was that Dogecoin? It was a joke to start with.
Yeah.
And it's actually a viable digital currency floating around out there, and people trade it and use it, and it's just like, really?
If there was a digital currency that we could all use in the world, I would imagine it would be one,
that's the theory.
Not like 40, 50, 1,000.
Yeah, and again, the concept.
Which one's going to take?
Is who's going to take over and who's going to be the digital currency of the world?
Wouldn't it be ridiculous if we get in a time machine and we go to the future, and the digital currency that won out is the one with the dog's head on
Yeah.
it. The
Well,
Doja coin.
So the federal government has been, again, no offense to J.P. Morgan.
This is. I feel like this is like beta versus VHS.
Yeah, exactly. That's exactly what it is. J.P. Morgan always said, "Oh, it's a Ponzi scheme. Don't invest in it." So on and so forth. But yet the whole time it turns out they've been working with the federal government to actually try to create a federal digital currency, which would be this wallet stuff. So again, you could say, how true is that? Or but
And
there's
again,
an example right there.
If you have a federal digital currency, the Uncle Sam coin or whatever it is, and it's backed by FDIC or whatever they create, how is that any different than my online banking that I have right now, sending things through
would
Venmo?
be no way other than it would be controlled centrally through that Bitcoin. And they probably, with the mood swings of it, they would probably never give FDIC insurance to it.
Sure.
Whereas a bank is a depository receipt.
Well, I just lost $20,000 in 15 minutes.
Yeah.
Can I get my
You'd have
insurance?
people, they'd go belly up in a day. But it would be something of that effect, still with some risk. But it would not to take the place of the dollar, but I think that's the direction that they're heading, is to try to replace the dollar with something digital where they have more control over it.
I'm sure that people have come into your office with cryptocurrency, and maybe they do believe that this is the future. We're going to get off the dollar. We're going to get off the yen. We're not going to, transform. Everyone in the world is going to use Bitcoin one day, and I'm just going to get ahead of the curve.
Yes.
But I bet the majority of people that have come into your office have been trading it because it's a commodity.
Exactly.
You can try to make, it's all speculation. It's like
they
a
took
stock.
losses. Yeah, they took losses and they won it out. So the bulk of the people were smaller transactions, no more than $1,000. They all resulted in losses. I mean, the bulk of them were losses. And there's other people that sit on tons. 20 years ago, somebody brought Bitcoin, and I was like, what is that? And I wish I'd have followed his lead, because there's a red Ferrari that drives in Manchester Road every once in a while.
It's his.
That's his. I was like, okay. Probably got out with paying no tax, too, because nobody knew what in the heck it was back then. But again, that's that big picture of everything as we go forward. So it's kind of weird, but that's the first step. Is EU now is forcing or mandating everyone to have this wallet, digital wallet. You kind of go, ooh, that's a little spooky. And it goes against the grain on, hey, 4th of July, freedom, so on and so forth.
Yeah.
So you go, ooh.
Let's get out of my business,
Yep,
Uncle
exactly.
Sam.
Exactly.
But as far as trading cryptocurrency as commodities, does it work like
Works
any
just
other?
like a stock.
Like a stock.
Yep.
If I sell it for a loss,
You take a loss, and it's either short term or long term. And
If I sell it for a gain,
you take a short term gain, long
Capital
term gain.
gains.
And remember, anybody trading stocks, commodities, Bitcoin, 12 months in a day is long term capital gains at 15%. Anything under that threshold, so if it's 10 months, it's short term. Ordinary income is what the default is. So basically, you'd be paying top dollar as you go forward. So a lot of people traded in 20 and 21, traded Bitcoin, they traded stocks, and they're like, man, look at all the money I made. And I'm like, that's great, but it's short term, and so it defaults to whatever your tax bracket is.
But technically, if I was running up the stock market, buying low, selling high, I might not have got as big a returns if I had waited a year.
Yeah, because of the net tax drag on it, to say, hey, you paid more. If you're a lower tax bracket, no. But if you're at a higher tax bracket, like 37%, and you made a couple $100,000 in 2 months, yeah, you're paying a lot in tax.
Yeah.
So there's a huge tax drag on it.
Well, that is kind of an impromptu discussion about Bitcoin, because Europe is now looking to give everyone digital IDs, digital vaccination cards in case the next pandemic hits, digital wallets to store your digital currency. And what is that the future? Is that the future?
It sounds that way.
Is that the world future?
Cashless society. I mean, again, like you said, you used to be able to go in places and it said cash only.
Hey, now I go into places and it says we don't accept cash at all.
No cash. You got to put it on a card. I remember years ago we went to, what was that, cafeteria? It was on Manchester Road.
Miss Sherry's?
Yeah, and it was all cash. I go in there with no cash in my pocket.
Carl's driving.
Yeah,
You ever been there?
Yep.
Get a burger?
Many times. Stood at the door waiting for them to open.
Yeah, exactly. They had a little ATM on the side. Let me go get some cash out and pay for this burger.
Exactly.
But now it seems like it's almost flipped.
It's flipped the other way. People don't want to risk their employees having a cash drawer and get robbed with crazy stuff going on today. Again, then
people don't pay with cash.
No.
Do I have cash on me right now? Make a guess.
I'd say no.
No,
because I never carry cash.
Yeah,
I got debit card and credit cards. Boom. That's very rarely.
Just lost a soccer bet to my brother. Am I going to pay him cash? No, I'm going to send him a Venmo.
Venmo, exactly.
Yeah.
Now the funny part is usually if I think I have
to declare
cash,
that on my taxes. By
technically, yes. But if I think I have cash, my wallet's sitting on the table. Everybody steals the cash out of it anyway, so
right.
I don't have anything when I leave.
Well,
so.
you got your wife and a lot of kids running around.
They're like, hey, I'll take $5. I'll take 20.
He'll never notice.
Yeah.
That I think I'm finding out that's what it's like to be a dad.
Yep.
Jeff.
Just throw your wallet on the table.
Wallet's
and say,
open.
Take what you want.
Yes. And whatever's left over. Hopefully, I have enough to get gas on the way home. All right. It is keep what's yours. What we talk about has a lot to do with the economy because that pertains to my wallet.
Exactly.
Has a lot to do with what's going on in other countries because we're all connected these days.
Exactly.
But ultimately what it boils down to, Jeff, keep what's yours. When I get paid every other Friday, I want to make sure that number that says that's on the bottom line that's getting direct deposited into my bank account is a lot higher.
Exactly.
Than the money that's going to the federal government.
Exactly. Yeah.
But it's okay if I siphon some of that off to go into my retirement accounts.
That's really what you want to do. And we've got software. Sounds crazy, but software. We can take a completed tax return. We put it in the software, and it'll give us 200 different ideas that apply to each individual, whether you're a small business, whether you're an individual, a retired person, doesn't matter. It will give, and maybe it's just a tweak here and there on your tax return. So we started to run a lot through there, and it may save you $100, in some cases thousands of dollars, in other cases tens of thousands of dollars.
Yeah.
But those are typically the small businesses.
And it's one of these things. How can I be better off on April 15th
exactly.
Of next year? How can I be better off 30 years down the line when I'm going to, retire
exactly.
and need
the money
to live on.
Yeah, that's
and
it.
How can I be better off every 2 weeks?
Every 2 weeks, exactly. Or if you get paid weekly, monthly, it doesn't matter.
Right.
Everybody could do a little something. You may not, if you're standard W-2 employee, you don't have 30 different options that you could put money away and save. But there's a good handful of them that you could do that would help you propel into retirement.
And it's a yearly game when it comes to our taxes,
yes.
on doing our tax returns. It's a lifelong game when you're talking about your retirement. And we're going to talk in the next segment, how does Social Security get taxed in retirement, and how does that work, and what are the percentages? It's a game for when you retire, but it's also a game every time you get a paycheck.
Yes.
And if I can keep $40,
it's $40 in your pocket,
and that's every 2 weeks. That's 46 times 20, 40 times 26. I should say. That adds up.
It quickly.
So if you're like, I don't want to go see Jeff and do the whole rigmarole because at the end of the day we're talking pennies and dollars, and it's not
necessarily.
worth it.
And again, the degree is a lot of people think they have to come physically sit down.
Sure.
We could do a phone call. Then we could send you links for our digital vaults, which are secure. You can upload all your data to it. We'll analyze it. We'll have a Zoom call, phone call afterwards. We've got tons of people that we do that with, kind of that remote. It's kind of, it's still there, still do tons of Zoom calls. And there's also a new one out there, which is it's called Roam. It's an AI. It's like Zoom and Slack combined together. It's kind of wild. I don't trust it just yet.
Yeah.
But that's the next up and coming option.
Yeah, the option's out there. So, and I will tell you, with the FSA that we set up with my son's school, we were able to keep $1,200 in
Exactly.
our pockets, on our paychecks, in our bank accounts, and that was just one thing that we
one
did.
thing. That's
the
it.
other stuff that we're doing with Jeff, maybe it is $50 here or $100 there,
Yeah.
but it all adds up.
It all adds up at the
Yeah.
end of the day.
Let me ask you, the people listening on the airwaves of the Big 550 KTRS right now, and text me back because I want to know the answer. 84126 is the text line. Would you like to have an extra $1,200 next year?
Yes.
Well, Jeff,
I'm texting already.
Yeah, I wasn't. Jeff's texting now. That is what you can do when you have somebody that knows the tax code and can find this stuff for you. This is stuff that I'm not going to find on my own. Unless I go to the library and
researched it and said, hey, what applies to me? Or somebody gave you a tip on it and said, hey, look at this. And you go look and go, hey, I can do that.
And not only is it something that Josh was on the radio talking about an FSA for his son's school. How do I actually implement that on my paycheck?
Yes.
So number one is finding out about it. Number two is finding out how to actually use it.
Yes, to your advantage.
To your advantage. And I think the only way truly that you can do that is to have somebody fighting for you on your side, someone like Jeff Zufall,
Yes.
Senior Tax Strategist and Wealth Advisor with Capital Advisory Group. The number is 636-394-5524. 636-394-5524. We talk about stuff in the news. We talk about, the future of a cashless society.
Yeah.
That's stuff that, we kind of spitball and talk about. But
you don't know how it's going to go, but it's out there.
And we can look at our finances and say, does crypto, work for me, or do I see a future with crypto? Whatever. But at the end of the day, you've got to have somebody in your corner that's doing your taxes for you, that's telling you of things that you need to be taking advantage of, and implementing that. Our FSA that we have comes out of my wife's paycheck.
Exactly.
Well, how did she get that set up? You helped her get it set up.
Exactly.
She wouldn't know how to do it otherwise. So having someone with you, holding your hand, walking you down the straight and narrow of keeping more money in your pocket rather than, because what's the alternative?
Pay the government.
It goes to the
states,
government.
And you never see it. And maybe they'll fix a pothole down the road.
And that
maybe they
$800
won't.
hammer and that $1,200. Instead of me getting $1,200 back, we just bought a toilet seat.
That's right. It's a beautiful one too.
The bidding
In
process
Alaska.
on toilet seats. I need to start selling toilet seats in Alaska. So, do you want it to go to the federal government, or would you rather keep it in your bank account? You don't even need to text me that. I already know the answer.
Already text them.
636-394-5524. That's Jeff. Give him a call. All right. Spent a lot of time on that, but we'll go to commercial break, come back. Got a couple more things to talk about before we get out of here. Happy Independence Day, everybody. It is a holiday weekend, so thank you for joining us. We'll be back with Keep What's Yours right after this.
Keep What's Yours continues with Josh Gilbert and Jeff Zufall.
Back on the show, back to the Big 550 KTRS Keep What's Yours, Jeff Zufall. And I always hear these kind of whispers, whether it's on this show or, other people are talking about it on other shows. And it always has to do with Social Security
Yes.
getting taxed in your retirement.
Yes.
And theoretically, I don't think I know how it works. Here's what I do know, Jeff, and jump in and correct me where I'm wrong. Social Security, I pay into it every paycheck, and when I retire and go to collect, it's not supposed to be taxed. Frankly, I already pay taxes on it at one point?
Hypothetically, that's how it was sold in the 30s when it was put in play. Was
a long time ago.
It was a long time ago. Hey, you already paid tax on this thing. Now, when we pay it to you, when you retire, you'll get this free money, blah, blah, blah. And of all people, or I should say all administrations, guess who was the one that instituted a tax on Social Security?
I don't know.
The Reagan administration,
Oh.
believe it or not. They needed tax revenue in the first half of his administration because the
early
war was
80s.
coming to an end. And they came along and said, hey, we're going to tax 5 or 10% of your Social Security. And every administration from that point forward has added to it to where we sit today. So
let me ask you this. On my paycheck stub, when I see that line that says Social Security,
6.2% of whatever you earn is pumped into Social Security.
But is it pre-taxed?
That's pre-tax, so it comes right off the top. So you make basically $1,000,
Before
6.2.
the federal government comes in.
Oh yeah, before the feds come in. So that's right off the top, and then 1.45 goes to Medicare. But remember that 6.2 is out of your check. Your employer will then match $6.2 dollar for dollar and send it off to the Social Security Administration.
So as of 2023, am I paying tax on Social Security when it comes out of my paycheck?
Well, when it comes out of your check, no.
Mm-hmm.
But when you actually say, I am 63, 65, 67, and I want income and I want to turn on my Social Security, literally that money that gets sent to you, I'll say the bulk of it is taxable.
Mm-hmm.
So what takes place is that, again, there's a lot of factors that are hidden in there, but most people do not realize that if you are, I'll say, even sort of successful. So basically, if you're single and you make less than $25,000
in Social Security a year.
Well, in total income.
Okay.
Less than $25,000, you're really not paying anything on your Social Security. But if you're filing jointly and it's less than $32,000, none of it is going to be taxed. Okay.
So hang on. That $25,000, that $32,000
Social Security plus anything else.
plus what you're a
Pension,
greeter at Walmart.
whatever, W-2,
So
part-time.
Social Security counts for that.
Yes.
And I got to tell you, Jeff, I mean, even if I had the house paid off, even if I'm driving that car that I've had for a long time, $25,000 a year is not much to live on.
Very tough. Now, again, if you sit back and say, hey, you're single, widowed, you're living off Social Security, maybe a small pension. I see people that do it. I mean, I don't know how they're doing it, but they're doing it and surviving. But the bulk of America will come into the other side of the equation.
Hang on. I got one more question. Because I'm stuck on this threshold of $25,000 a year, $32,000 a year, married filing jointly. If I have a separate, a savings or IRA or Roth or whatever, and I start to pull that money out to live off of, does that count towards this $25,000, $32,000 threshold?
Yes, but not the Roth. The Roth is non-taxable, so it's going to be set to the side, really doesn't count.
Because I already paid taxes before I put it in.
Exactly.
So now it's just kind of like a bank account.
Kind of the same ploy that Social Security was sold under.
Was supposed to be. So as long as I follow the rules of the Roth,
you're perfectly
that
fine.
won't ding me when it comes tax time.
Now an IRA showing up, which is required minimum distribution. So you got to figure, hey, I'm 62 or older when I start Social Security. What takes place is anywhere, there's 3 different laws out there now for your required minimum distribution. That's dollars that are in an IRA that you will be forced to take out at a later date, depending upon your age. Now we're at, was 70 and a half. Now it was 72. Now it's 73. There is talk of part of the Secure Act, which was thrown out there, going to age 75, but that's not until like 2044 or something like that.
So maybe I'll hit that.
Exactly. Well, I think I made it right under the wire on that.
You'll be long gone by then.
Hope not. But the bulk of it is, we'll say you're 73. So you turn on your Social Security and you're making $25,000. You're single. You're making less than $25,000. You never pay tax on your Social Security. It's a great time.
Do you see people hitting that threshold?
Yes.
They're living off of savings?
Yes. And then what takes place are a Roth. And then all of a sudden, your required minimum distribution shows up, and it's $10,000 a year. It blows your $25,000 out of the water, adds 10 to it. You're over the threshold now. Now 50% of your Social Security is now taxable.
And I don't. The theory is you don't want your Social Security to be taxed because that's, if it's not taxed, it's yours.
Well,
but all of a sudden it's taxed, and now I have to pay the federal government.
You have to pay a tax on top of it. So a lot of people get real comfy in retirement, and then in their 70s, all of a sudden their required minimum distribution shows up, and boom, you have this extra income. That's your tax time bomb, and then you're paying way more in tax than what you were previous year.
Is this why people do Roth conversions?
Yes. The concept.
This is the reason.
You can't wait until your RMD shows up and then go, ooh, I'm going to do a Roth conversion. because it's technically too late. You're kind of I shouldn't say every, that's loaded. The bulk of the analysis we look at, it mathematically doesn't make sense to do the conversion just because they're at such a high tax rate. You're just piling on the tax. But if you are, say you're 62, 65, you retire, you might work part-time, you got a couple years that you can start packing money away doing Roth conversions, and yes, you pay tax on it, but it won't be as bad as having your RMD and Social Security at the same time.
And the idea is the whole time, and I'm still just kind of baffled by this, people will make a decision in their 30s and 40s like me and say, hey, I'm going to do this pre-tax account and I'll worry about the taxes later.
Yes.
And then it comes to 68, 69.
And it's too late.
And I haven't worried about that.
Yes.
I made an agreement
With
that
the
I'm going to
federal
worry
government.
about these taxes later.
Yep.
And then I never did.
And you never worried about it.
So you have to have an advisor holding your hand through this process, saying,
walk you
we
through
need to
it.
worry about your taxes.
Yes.
You're going to have a tax time bomb waiting for you. Let's start converting to Roth. Let's start, paying those taxes down right now, because the idea is pay the taxes later when your tax bracket is lower.
Hypothetically is lower. Taxes over time, if you say, hey, where we're at today, what are taxes going to do in the future? They got to go up. You can't put your head in the sand on that one. They have to go up over time because of how big the debt is. But that's where that weird conversion to digital currency could come take into place, and maybe some of that debt goes away. But the odds are, again, 2024 is an election year. And then all of Trump's tax cuts, if you want to say, or his tax package he put in play in 19 actually sunsets in 2025. So whoever wins 24 is by design going to be forced to revamp the entire tax law. And it's pretty extensive on what they're going to get into.
And that is the House, the Senate, and the President that weighs in on all of that, I'm sure, because the House has to.
And the odds are the taxes are going to go up. But again, don't use that as your ammunition and go, hey, I'm going to do a Roth. The theory is if you're younger, and I'll leave that age open, and you're at your highest earning potential, like you're making some good money. The theory would be is you would defer it at a 24% tax bracket or higher to take it out at a 20 or a 12% tax bracket at a later date. So
if I'm making, married filing jointly, if we're making $200,000, $300,000, $400,000, I'm not, by the way, I'm not. You should see the car I drive. If you're making that much money, you're in a good 35% tax bracket.
So if
I retire and I have no income coming in, I'm down.
Very few people will go to no income, but you will. The concept is you stay at the same income level you are working today when you retire. That's efficient planning. The question is, we go into retirement? Do you need $500,000 a year to go into retirement?
No.
The
most
house people,
is paid off.
No, exactly. 65 should be your mark.
The kids are long gone.
Long gone. House. Everything. The target is
grandkids are expensive.
Look at 65 as that jumping off point, because that's where you can get Medicare. So even if you're paying your own health care, everything should be paid at 65.
But theoretically, maybe when you go to retire, your tax bracket is now 20 or 25%.
So you put
24%.
it away at a 35 and you're at a 24, you're saving a ton of money.
Where would you rather
taxes.
pay the taxes on? 35% or 24%?
Exactly.
And that's
the game that has to be put together versus some people just blindly saying, hey, I'm going to put it in a Roth. I'm 22.
Yeah.
I'm going to put it in a Roth 401k and put my head, I don't ever have to worry about taxes. I agree with that, but you're missing the tax savings as you go forward.
You're leaving money on the table, and that money is going to the federal government.
At some point in time, everything that you do in your financial life will end up on a tax return. So be prepared.
And that Social Security stuff, you have to think about that as well when you're doing a future plan.
The IRS is not slow. They know exactly what to do.
Yeah. So that's something that you want to keep in mind as well. Give Jeff a call, 636-394-5524. If you're thinking about retiring anytime in the next 10 to 15 years, you probably need to sit down
worry about it.
and worry about it, because now's the time, not when you retire, because it might be too late to take advantage of most of this stuff. So we'll go to commercial break, but 636-394-5524, Capital Advisory GRP, Jeff Zufall. We'll be back right after this.
Keep What's Yours continues with Josh Gilbert and Jeff Zufall.
Back on the show, not a lot of time. We spend a lot of time talking crypto and stuff, but I think that was really valid. What other countries are doing might be a peek
That just
into.
kicked in last week, so hopefully we don't have to do it.
Right, might be a peek into something that they suggest over here. Talked about Social Security being taxed. That's something that you need to worry about if
Yes.
you're coming up on retirement age.
Gets very expensive.
You need to put that into your retirement plan immediately if you haven't already. But something really quick that we have seen a lot of, the ERC, the Employee Retention Credit.
Yes.
It's on. I hear it all over the place on radio.
Yes.
It's on TV now.
It's on TV.
People saying, we can get you money.
Yep. So you got to be very careful on who you deal with. And I say that honestly. There's a lot of these ERTC mills that are popping up all over the place that say, oh, yeah, we'll get it for you. You're going to pay us a 18% retainer. We'll take care of it, and then you basically didn't even meet the basic requirements, but you wrote them a check.
You pay us up front,
Exactly.
and then we'll
So
see if you qualify.
They do this hypothetical, oh, hey, this is what you should get back. So say it's $100,000. Sounds crazy. We've seen them $500,000 in a check being cut back. The average is 18% is what they want to do the paperwork for you and file it and push it all the way through to get your money. But a lot of these places, there's requirements that the company has to meet to make that mandate. And some of these mills don't care. You sign on dotted line, boom, thank you very much. And they'll be gone in 6 months, and you have no one to talk to.
And these mills could literally just be someone who's savvy enough to run through the paperwork.
Yes.
But this is literally what, at Capital Advisory Group, this is literally what you do for companies
Yes.
every single day.
Yeah.
Why wouldn't you not go to a legitimate...
And we're going to reach out and use a third party that helps propel this forward, and they do I'd say they do probably 60%, 70% of the paperwork. We round up the ground data, make sure that you can make the cut, basically, because there's just a few things that we look at. And then if you do pass that first stage, it goes to them. They do kind of a second look, and they go from there.
So these are fly-by-night. They're like when the hailstorm comes and the roofing guys show up.
They show up like, hey, we can do it for
pay me
cash.
half up front, and then they disappear.
Yeah.
So that's kind of what we're dealing with today.
So just look for someone that's got a tie to a trusted advisor, somebody to a tax professional. And that's all you're looking for.
Or just go to Jeff Zufall.
Exactly.
So if you're a small business or even a large business and you want to take a look and see this employee retention tax credit, you hear about it all over the radio, but you just need to call Jeff, 636-394-5524, because they take care of this stuff every day, not a fly-by-night roofer. They'll take care of you. CapitalAdvisoryGrp.com, that's the website. The phone number again, 636-394-5524. And that is the show.
Perfect.
We'll see you next week, Jeff.
You betcha. We'll see you.
Happy holidays.
Same to you.
You've been listening to Keep What's Yours with Josh Gilbert and Jeff Zufall, Senior Tax Strategist and Wealth Manager at Capital Advisory Group. To learn more, call 636-394-5524 or visit CapitalAdvisoryGrp.com.